When you go to a bank or to a mortgage broker, you have two questions in mind. First question is, how much deposit do you need to purchase a home? And your second question is, how much can you borrow? The income that you get from the work that you do determines how much you can borrow. At today's interest rate, so the cash rate today is 2.35%. And of course, the bank has a buffer of around 2 to 3%. So the rate that the bank provides you is 2% higher than the 2.35%. Today's rate, you're looking at around anything in the low 4s or the high 4%. When I say low 4s, that's low 4%, that's 4.1, 4.2, 4.3%. Those are the rates, the variable rates of banks. And it can go as high as around 4.8, 4.9, or it can even go higher than 5%. And so the higher the interest rate, the lower the borrowing capacity. The video today is for me to discuss how you can increase your borrowing power. The first tip is to reduce your debt. So what are the debts that I'm talking about? I'm talking about your credit cards, your personal loan, and your car loan. All of this will affect your borrowing capacity. So if you have an existing car loan, there's a balance of around $10,000. The repayment for that will of course reduce your borrowing power. And then of course, if you took out those credit cards, even if you pay out the cards, let's say you use the card every month and then you pay it down or you pay it out every month, so there's zero balance at the end of each month, the limit of that credit card will of course reduce your borrowing capacity. It's because the banks calculate it this way. So let's say you have a $10,000 limit and we'll calculate it at 3% for the interest rate of that credit card. So it is assumed that every month, irrespective of whether you use the card or not, you will have to pay $300. That will be included as like a repayment, which of course diminishes your borrowing capacity. So my first tip is reduce all these debts. If not, probably reduce the credit card limit. So if the limit is around $10,000, bring it down to $5,000 or the minimum, or close it. If you don't use it often, just close the card. For the car loans and the personal loans that you have, if the balances of these loans are very minimal, almost nil, like let's say if you have a $5,000 balance in your car loan, if you have enough savings to cover that $5,000, then I'd actually advise you to actually close down the car loan or the personal loan. That way, your borrowing power, of course, is greatly increases. My second tip is choosing the right home loan product. What do I mean by this? So each bank would have their own servicing calculator. And then the servicing calculator determines how much you can borrow. There are banks in which the servicing calculators are stingy, and there are banks in which servicing calculator is very generous. So we brokers know which banks to go to. If your problem is not how much deposit do you need, because you've got enough deposit to complete the purchase, but your problem is you want to purchase something really nice, a little more expensive, and if you need a bigger borrowing capacity for that, what I'll do as a broker is to bring you to those banks which has a very generous servicing calculator. The bank of course determines how much you can borrow, which bank we go to, and then of course the other way we do this is of course choosing the right home loan product. If you choose a fixed rate, the assessment rate, because the fixed rates right now are much higher than the variable rates. So if you choose a fixed rate, there's always this buffer, which is the assessment rate. There's like 3% on top of the fixed rate. So if the fixed rate is around 6%, there's a buffer of around 3%. So you're being assessed at 9%. A higher assessment rate, of course, reduces your borrowing capacity. But if you choose a variable rate loan product, especially if you choose just the basic variable rates right now, the rate you get is around 4.5%. So the buffer of 3%, put that on top, that 4.5 becomes 7.5 for the assessment rate. So a 7.5 assessment rate gives you more borrowing power as opposed to the 9% assessment rate. So choosing the right home loan product, choosing the right lender, which of course is generous in terms of servicing, all help in increasing your borrowing power. And so us as brokers, we know which banks has a very generous calculator. We know which product to go to offer you and is most suitable for you if borrowing power is your main issue. The third tip I have is increasing your income. So let's say you've got a full-time job, and most of my clients are nurses as well, and of course you work overtime. If you do work overtime, the more shifts you get from the hospital, the bigger your income, right? And so there's a way for us to calculate your income based on the last 6 months in which you've been working a lot, or you've been taking a lot of overtime shifts, or you work on weekends, or you work in the evening. Your rate per hour increases as well because there's this penalty rate. So if, let's say, you're paid $30 per hour, but of course you work in the evening, there's like a 50% penalty rate on that one. So you're paid $45 per hour instead of $30 per hour because you work in the evening, or you work on weekends and you're paid twice your rate, which is $60 if you work on weekends and in the evening. So if you're one of those people who work overtime and gets a lot of shifts overtime, and in the last 6 months your income has actually increased dramatically because of this, then of course this increases your borrowing capacity. And of course, if that overtime income or those extra shifts that you get is part of the work that you do, then of course we can justify that to the bank. Another way to increase your borrowing capacity is if you're a salesperson, and then of course you get those commissions, and those commissions are provided to you by the company. I've seen this in a lot of my customers who do get commissions of as much as, like, let's say $50,000 a year. You know, if that $50,000 has been consistent in the last 2 years, and then you've been getting that as commissions, then of course that increases your borrowing power. Another way is if you actually get those bonuses from the company, and the company, depending on how the company performed in the last 6 months or 12 months, and then of course they give out these bonuses of around $5,000, $10,000 a year. If that's been consistent in the last 2 years, then we can include that as part of your income. And so these are ways of just increasing your borrowing capacity. So what I've just given you are my 3 tips on how to increase your borrowing power. My first tip is reduce your debts. My second tip is choose the right home loan product. And then my third tip is increase your income.